Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of Brent crude oil, spot gold, and Bitcoin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or on any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
ICE Brent crude oil futures. An immediate countering bullish army and bullish opening white Mariposa yesterday, after the previous session's bearish open and close black Mariposa. Additionally, we still have the overhead weekend gap between 101.34 to par 73. Interestingly, the high yesterday matched the high from the previous session, not even attempting to fill in the gap lower made over the weekend. Now, prices pushed back up into and through a congestion between 97.68 to 99.61, but ended up still closing within it. Further up, just beyond the gap, we have the congestion between 101.55 to 103.34, some of it dating from August 2014, though the market looks reluctant and unlikely to test it right now. Meanwhile below, well, under the September 23 high at 97.68, we have little bar some congestion formed over mid-April till the October 23 high at 93.79. Our prices also seem reluctant to press too far lower as well. In the big picture though, the market is caught approximately between two necklines. The overhead dark blue neckline of the July to November 23 head and shoulders top is one, which is currently at 116.21, and the other is the bright red neckline below of the September to November 24 head and shoulders top, currently at 87.25. This is quite a wide band, but it does set up the opportunity for one of two possible scenarios. Either the whole action this year is one huge topping action, or one huge halfway hesitation. The doors are open for both possibilities, so please just be aware of them. Finally, in the immediate term, there is a possibility of a late April to date possible descending triangle pattern, currently 95.93 to 110.99. This is a nascent pattern as we have only had two touches per side right now, but it is best to be aware of the possibility. Now we are today testing the base of this possible pattern. Now so far today, well, as I said, we are testing the base of the potential descending triangle pattern. In case this goes, we have further support at the October 23 high at 93.79, then a small Fibonacci based band around 92.07 to 92.42. Below even that, we have the rising mauve medium moving average. It's not that far away at 89.30, just above the bright red neckline extension. Spot gold. A key reversal down yesterday after the previous sessions failed day 2 in a possible 2-day bullish separating lines pattern. It was a significant move lower, with the second lowest close since late March and approaching the combination of the pair of 50% Fibonacci lines of the October 25 to January 26 move at 44.35 and the May 25 to January 26 move at 44.20, as well as the rising gold long moving average, currently at 43.99. Overall, the market continues to move down nicely within the main pattern here, which is the bright red, big, late January to late February bearish shift pitchfork. In between the bright red middle time below, which is currently 43.18, and the bright red upper time above, currently at 49.07, closer to the middle time right now. This bright red bearish shift pitchfork has been a pretty good showrunner for the market here since its inception. So far today, a small move lower, but mainly staying within yesterday's range, though we've now pushed down below that and actually testing the range of the low of last week and towards that 50% Fibonacci line. But for the moment, it still seems the market is getting a little bit concerned by those supports below. So maybe test them, but I don't think at the moment we have the pressure to push down below it. Bitcoin. A key reversal down and bearish engulfing pattern yesterday after the previous session's shooting star pattern, type 1 bearish. The top side was capped, as it has been all of last week, by the 61.8% absolute Fibonacci line at 78,028. Though this time it had the added reinforcement of the slowly declining mauve medium moving average, currently 78,668. The move down was in a fairly free area, with below the next supports being the April 25 low at 74.44 and the March 24 high at 73.779. So let's try that again, 73.779. Though the green slowly rising short medium moving average, currently at 73,600, is now reinforcing those lower levels. Overall, one could say we are back within the previously breached, though not fully broken, dark blue February to date bull channel. It's currently 69.42 to 80.854. Though how good this now is as a bull channel does have a question mark over it, but for now it will do. Now, I previously asked if this bull channel, this shallow bull channel, was either a potential halfway hesitation or a basing action, and to be honest, the question still hangs over the market. However, I will say that having this action since February with a failed attempt higher in early May does lower my expectations of it being a potentially bearish halfway hesitation. At the same time, the lack of positive, sustained bullish actions also tempers expectations on the upside somewhat. And so far today, a small dip, but short of testing the April 25 low, and we look like an indecisive, well, we did look like an indecisive doji cross, but a little bit more like a hammer now at the moment.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Toftpick and ADM Investor Services International Limited. And here comes the final important bit.